This past week was a pretty big week for Google stock shareholders, and of course an immense week for employees of Wiz, founders of Wiz, investors in Wiz, because Wiz and Google reached an agreement. Google is going to pay $32 billion to acquire Wiz. Now remember, 9 months ago, we already talked about that, but 9 months ago, the number was $23 billion and not 32. So let's discuss why Alphabet, Google pays so much for this company, why it makes sense, the cons as well, because there is a risk that this deal does not go through. They expect this deal to close in 2026, pending regulatory approval. If that deal does not close, Google will have to pay 10%, $3.2 billion to Wiz. A bit of the same as we've seen with Nvidia and ARM, Adobe and Figma. Basically have to pay a penalty fee if you do not acquire that company. It's a pretty big breakup fee, 10% of the overall fee, pretty big number. So let's discuss all of that in this video. If you enjoy this type of videos, hit all the buttons. Would really appreciate that. I am a shareholder of Google. I personally think this is a good deal. I thought the same 9 months ago, and I'm going to say the same today. It is expensive, but I'll explain in this video why it's actually worth it. And so before continuing, hit all the buttons. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor, and definitely check out the link for FinChat. You get 15% off. All new users get 2 weeks of FinChat Pro for free. More on them in just a second. Now, if we look at Google Alphabet, it has a market cap of just over $2 trillion. In the last 5 years, the stock is up 211%. In the last 3 years, it's only up 20%. The last 12 months, it's up 11.3%. And year to date, stock is down 13.3%. If we look at PE trailing 12 months, that sits at 20.2 times. Forward PE, 18.1 times. Now, I already talked about Google, why it is cheap, but why it has always been cheap, right? The 5-year average for PE has been around 24 times, so it has never really been that expensive. As you know, I've been featuring FinChat in my videos for quite a while, even before they started sponsoring a couple of my videos. What is FinChat? It's basically a stock research platform that has complete financial data on all stocks globally. And the best part is this part right here. They're the only platform that tracks company-specific data points. So since we are talking about Google and Wiz, we have to look at Google Cloud revenue. You can click it right here, segments and KPIs. You can even put here the growth rate. So, of course, Google Cloud in the last couple of years has grown quite rapidly, right? Since the December quarter of 2019, it has grown at a compound annual growth rate of 35.5%. Now, yes, it did dip, right? This was the bottom here of the growth rate, September quarter of 2023, 22.5%. But since then, it has reaccelerated. And of course, the dollar amount gets bigger and bigger. Last quarter, the issue was that quarter over quarter growth rate decelerated a little bit. But as I've explained in the past, if you look September quarter, that was the bottom. So this was quite an easy year over year comparison. Plus, if you listen to the earnings call, or if you're a subscriber to the channel, you know that I covered this. They said they're capacity constrained. If they had more capacity, they would have grown faster. So my opinion here, an overreaction. Now, if you want to look at some other things, of course, you can look at YouTube ads, Google search. All of that is available here on the FinChat platform. So if you want, you can try it out. 2 weeks, you get free access to FinChat Pro. And if you want to upgrade, you can get 15% off if you use my link. So you help yourself out and you help myself as well. Now, just an FYI, if we compare the big cloud players, right, these are based on the last Q4 2024 figures, AWS still the largest at 30% market share. Then you've got Microsoft Azure 21 and Google Cloud at 12, with Alibaba Cloud at 4%, Oracle at 3%. Now, Google makes the majority of its operating income still from Google services, right? So all of this, YouTube ad search, Google search, Google network, Google subscription, and all of that, that's the big chunk here, operating income. Now, what is growing quite rapidly is, of course, a Google Cloud operating income that is improving at a rapid pace, as you can see right here, right? Revenue, as we've seen, has grown quite quickly, but operating income is now following suit. And I think that with this acquisition of Wiz, we can see this grow and continue to grow quite rapidly in the future. And so on March 18, we had this huge announcement. Google announces agreement to acquire Wiz. They're going to acquire that platform for $32 billion. So they say here, this acquisition represents an investment by Google Cloud to accelerate two large growing trends in the AI era: improved cloud security and the ability to use multiple clouds, multi-clouds. Now you're going to say, isn't this going to be a conflict of interest, right? Because Wiz works with all the other clouds. Are they now only going to work for GCP, which is Google Cloud? How's that going to work? Well, that's where the genius behind this move actually comes from. Well, that's in my opinion the genius move here. So they first continue by explaining that Wiz delivers an easy-to-use security platform that connects to all major clouds and code environments to help prevent cybersecurity incidents. Organizations of all sizes, from startups and large enterprises to governments and public sector organizations, can use Wiz to protect everything they build and run in the cloud. Wiz is an innovative leader and continues to deliver new products with strong adoption, fueling rapid business growth, including over the last 12 months, in which it has begun to deliver new categories of cybersecurity solutions. Google Cloud is a leader in cloud infrastructure with deep AI expertise and a track record of industry-leading security innovation. Bringing all this to Wiz will help make their solutions even better and more scalable, benefiting customers and partners across all major clouds. The combination of Google Cloud and Wiz will, and then here they mention a couple of points, vastly improve how security is designed, operated and automated, providing an end-to-end security platform for customers of all types and sizes in the AI era. Scale cybersecurity teams by providing them an automated security platform, lower customer costs of implementing and managing security controls, protect against new threats and emerging due to advancement of AI, prevent breaches, and help organizations respond to breaches much more efficiently. And then the last one here, boost the adoption of multi-cloud security, and as a result, customers' ability to use multiple clouds, further spurring innovation in and the adoption of cloud computing. I think that last point is the most important one here. Wiz's product will continue to work and be available across all major clouds, including AWS, Azure, Oracle Cloud Platform, and will be offered to customers through an array of partner security solutions. Google Cloud will also continue to offer customers wide choice through a variety of partner security solutions available in the Google Cloud Marketplace. And this is why I think it's worth paying the price, right? The projected number for Wiz for 2025, if we look at ARR, annual recurring revenue, is around $1 billion. That's basically doubling the number that they did in 2024. By the way, Wiz was the fastest company to go from $1 million to $100 million in ARR. Another interesting thing that you might not have known, this comes from the software analyst Cyber Research on X. Wiz, the $32 billion deal, is more than all the other Google acquisitions combined. And if you want to learn more about this whole ecosystem, you've got Google, you've got Wiz, GCP product, the cloud native application protection products, which fall under Wiz. Combine that together, you've got AI plus cloud. And then here you've got the frenemies, like we explained. Frenemies because, well, they're competitors of Google Cloud, yet they're also now going to be their customers through Wiz. And the thing behind this deal is that, look, Google Cloud, they were late to the party, right? AWS, Azure, much bigger than them, but Google Cloud still doing quite well, still growing quite rapidly. And now with this acquisition, not only is this a huge added value to Google Cloud, but they are fine with other customers going to AWS or Azure. Why is that? Well, because Wiz is there. So they're going to make money from that as well. So you basically have your hands in a couple of, what do you say? You have your hands in some honeypots or whatnot. I don't know how you say this. Doesn't matter. In my opinion, this is a good deal. This is worth it. Yeah, this is a lot of money, $32 billion. Of course, luckily, Google is a very, very profitable business. They have plenty of cash, so they can buy this type of business. Plus, to pay it back, that $32 billion, if this is going to reaccelerate the growth for Google Cloud, well, I don't think it's going to take that much longer to pay it back. Yes, ARR for Wiz in 2025 is expected to be $1 billion or so. But now if you combine both of them, the costs to run a company like Wiz will probably come down because Google can help with that. There are probably some synergies there. So it can help with the margin profile of a business like Wiz. So paying back that deal, paying back that huge $32 billion, I don't think is going to take that long for a company like Google. Now, of course, there could be some issues with this deal, right? As we've said, regulatory approval. Oh, by the way, Google just woke up in my house, scared the living crap out of me. So I guess Google is always listening. Anyways, what was I saying? Yeah, regulatory scrutiny is something we have to keep in mind, right? Because if this deal does not go through, that's a $3.2 billion penalty that Google has to pay. So that's going to hit them if that happens, right? If that happens. Then some customers, maybe not, they might say, oh, now that Wiz is part of Google, we might not feel comfortable with that. Could be. Although as they've explained, nothing much will change here. It's going to be business as usual, but you shouldn't really worry about change of service or something like that. Actually, I think it's going to be enhanced in a very, very positive way. And then the last one is, of course, integration. We've seen plenty of these big acquisitions in the past. Not all of them are successful. For example, a Broadcom, super successful with integration. Now, as I've shown you, past acquisitions for Google, also YouTube, Android, and all the rest there, they were quite successful. So I think this one will be successful as well. But always integration, when you do these large acquisitions, there might be some issues. Those are things you have to take into consideration. So all in all, huge deal. This might also positively affect, by the way, the other cybersecurity names that are publicly traded, because if Google is willing to pay $32 billion for a Wiz that is maybe generating $1 billion in ARR in 2025, then maybe the other companies, right, the Palo Altos, the CrowdStrikes, the Sentinel ones, maybe they might get a little multiple expansion. Could be. Second of all, or third, can't even remember, all because of Google waking up, that's, well, the fact that maybe the M&A market is open. Maybe now we're going to start to see way more activity in the M&A market. Could be very exciting time. So as a Google shareholder, I am pleased with this. I hope it goes through. Of course, we'll have to wait a year, so fine. But I think this is a good move by the company. What do you think? Let me know down in the comment section below. Hit all the buttons. Check out FinChat for 15% off. I highly suggest you at least try it out. Just try it out. If you like it, you can upgrade. So that's about it. Share your thoughts, hit all the buttons, and I'll see you all in the next one. Bye-bye.